Good morning, everybody. This is Dennis Woolman with the Active Trend Traders. I want to welcome everybody to the How to Make Money Trading Stocks webinar. And let's get kicked off. Welcome no matter where you are. I know if you're in California, you're probably, I don't know if you're seeing sunshine yet, but I know it's been raining really hard there. Apparently in the Bay Area, they lifted the drought conditions. That's very interesting. And I've been watching some of the snow across the rest of the U.S. going, oh my gosh, that's a lot of snow. And so I hope you are warm and dry as we get into today. I want to remind everybody that all the materials that we do present are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. If Michael were with us, here was his disclaimer. And there's a little bit about me. I'll leave that on as I chat briefly about what's going on in the market. I have a couple of new slides to show everybody today, having to do with what is the tendency after a new administration comes in, and it goes back 65 years, back to when President Eisenhower became the president way back in 1952. And so I think you'll find it quite interesting. It ties very well into what we've been talking about with regards to seasonality and looking forward to what's going to be transpiring next. Should be very interesting times. The inauguration is next Friday. Also, Monday is recognition of Dr. Martin Luther King's birthday, and so the markets will be closed on Monday. Those of you who are premium active trend trader members, I am going to be putting out this weekend a comprehensive comprehensive approach for how we're going to be focusing and trading on the leverage ETFs that now make up a large part of our watch list. And I think you'll find that, one, it'll be very interesting, but the other objective there is so that individual premium members in their own reviews and all that kind of stuff can have a really good picture of, okay, what will be triggering the trades, so that way you can plan your own trades, and that's something I want to bring, help everybody get to that point. And so that's what I'm talking about. My wife's been going around taking pictures, and she got a picture of me prepping up for one of our presentations during the week. This week we're going to be talking about the high probability early entries triggers with the premium members at the Active Trend Trading System. And this is me in my office. And no, that is not a live lizard. That is a gecko. That is not a live gecko either. That is a bronze gecko. And we have a lot of those geckos here, I won't say floating around, but scampering around here in Hawaii. If you're ever wondering what, I think the Wednesday night training sessions for the Active Trend Trading members, and then also being able to record that and then archive it onto the website is, really is a real high mark for the Active Trend Trading system and the services offered. And with that said, if anybody knows, or anybody who's watching this recording knows, I'm looking for somebody to help me do a facelift on the Active Trend Trading website. And so if you know some IT kind of guys or people who specialize in that you may have used in some of your business dealings that are fairly reasonably priced, but they can stay really active with me, it's time to give the website a facelift. And so if you know anybody, please drop me a line or just forward my email to them and they can contact me. So I appreciate that. Let's get on into taking a look at what's going on in the market. This week, the week coming up, we're getting that post-inauguration. Will we get a post-inauguration drop? and how the markets are acting, they're acting as they should for the index seasonality that we've talked about several times. So the SPX, is there enough room, is there enough momentum to push past resistance? It's sitting about 2280. Right now that is, just basically hanging out right below that, and it's bouncing between 2280, 2260. And the NASDAQ, on the other hand, it's continuing to push to new highs. It's really been, the little engine that can since the beginning of the year, and the Russell just continues to digest its gains. I mean, it had a 20% gain from about November 4th. And over the last 2 weeks, it's basically just rolled in a little trading range and hasn't come out of that whatsoever. We thought we were getting a little bit of breakdown earlier in the week. When we look at the charts, we'll see that. But it didn't stay broken down for long. So outside influence is coming up this week, post-inauguration drop. Earnings around the corner, and they're starting to take effect now. And the January effect, once that's out of the way, then what? What's going to take place then? As I've shared with many people and shared with with everybody last week, is that the assessment of the IBD 50 that I provided to the Bay Area moneymakers this past Tuesday night does reflect that the IBD 50 stocks tend to go into a little bit of a swoon after, latter part of January into February and March. And oftentimes the lows for the year are hit during February and March timeframe, and then they go on from there. They get it's just a really basically a nice pullback into a buying position, and if we posture ourselves to wait for those areas and capture some of those IBD 50 stocks coming off of their yearly low, oftentimes they go in for a really nice run. That's where we're going to be focusing with our strategy number 1, which is portfolio building for 2017, along with the leveraged ETFs. Here's the percentage of stocks above the 20-day moving average as of about 9 o'clock this morning, Pacific. And as we can see, let me get my drawing utensil up here. There we go. As we see, this is the spiders. It's the substitution for the SPX that I'm utilizing, and it's pushing up about 227. But the percentage of stocks on the NYSE that are above their 20-day moving average has actually slipped. Now it finished last Friday up here, so it's regaining that ground. However, it is lingering there between 60 and 50%. That's showing us that the stocks there are not keeping up with what the S&P is doing. The S&P came off this really nice rebound, and it's playing with the previous highs. We'll see if it pushes past that. At this point, we become interested in this particular indicator when it gets down below the 30 level. We'll pay attention to see what the TSI and what the other oscillators are showing us if it gets above the 80 level, because typically it doesn't stay above the 80 level very long, but that doesn't necessarily mean that it doesn't, it does correspond to the same thing as when we get it down here below the 30 level for a particular rebound. This does not translate into, okay, this is where the market is topping. Excuse me, I'm just getting over the end of a cold, and occasionally I have a little sneeze that I got to take care of. So that's what we're looking at there. Here's where the markets were at 9 o'clock this morning. As you can see, the Dow, the markets were mixed. The Dow was down, the S&P was up a little bit, NASDAQ was, had continued to push to a new high along with the comp, and then the Russell still operating within its trading range. As we can see, the NASDAQ and the NASDAQ composite still up above the highs from last year, and then we're up about 0.82% so far this year. Let's take a look at the indexes. Let me get this back to the SPX. There we go. The SPX, if you are following strategy number 3, excuse me just a second. Okay, if you're following strategy number 3, which is the wealth and income generating strategy where we sell weekly premium against an open position, I'm going to be looking at the spiders. With this reversing hard, off of this, 2280 level, it may be time to go ahead and take on a trade, especially since it's a 3-day weekend, and I'd be looking at selling the 20 January. This is the weekly, the 20 January, 226.5 call, and try to pick up about $1.20 on that, $1.15, somewhere around that. When we go to the next session, which is the final hour, we'll see if we still have that set up ready to rock and roll. Well, let's take a look at what's going on here. Now, one thing we do have to remember that next Friday is a lot of interesting things are going to be happening next Friday. One, of course, is the inauguration, which that may mute whatever's going on in the market, but at the same time, the market is next Friday will also be monthly option expiration, and that tends to have a little bit of a positive bias on the market to push prices up. But as we can see here, what we got going on, it looks like we may be finishing with a tombstone doji for the week. Now, this is not really reversing a big uptrend. It just basically has come up and butted its head up against a ceiling of resistance at the 2280 level and is reversing back down off that. As we can see this week, the 20-day moving average held again, but as a trend goes along. So you can see on the first come back and touch, it came back and touched, and the 8-day held, and it was broken one day, but then over the next couple of days it came right back up through it. But then the next time we come down to test, which shows that this move up, this 10% move up is getting weaker, is that it came down, and instead of stopping at the 8, it came on down and tested at the 20. Hammered it down a little bit. And so what we'll see is we get these testing on the moving averages. There's a tendency for every time it's tested, it will start hammering the moving averages down until finally you get a breakdown dropping to the bottom side. And so that's one of the early indication that, okay, hey, the at least short-term trend may be changing. As we see here, yes, we're pushing on to new highs. The TSI is not on a daily basis, and it's kind of flat. Both the TSI and the momentum is basically fairly flat for the week so far. On the TSI on the weekly, okay, it also is a little bit of negative divergence on the weekly basis, and the momentum, which when we checked this earlier in the week, it was a lot higher trajectory, but now it itself has started to bend over a little bit and started I had an alert go off. I don't know what it was, but it was an alert. Okay, so we'll see what this transpires to next week. Again, the positives holding the market up next week are that typically the week going into the inauguration tends to have a slightly bullish bias. But over the last 1, 2, 3, 4, 5 weeks after the S&P hit its high up here the week of 12/12, we've basically done nothing but go sideways. And in fact, this shooting star candlestick right here, because I don't believe its high has been busted, or it may have been busted here, but that still in fact is a bearish reversal signal. So on the S&P, it appears as if the oscillators and also current position price action wise, it appears as if it favors a break back down to the downside, but again it's still operating within this larger overall trading range. Let's take a look at the NASDAQ. Now earlier this week we drew in the Fibonacci retracements. This is the 1286 and this is the 161 retracement, and as we can see we broke up past that. The NASDAQ made a nice bounce off the 8-day moving average here, and when it gets up in this area around the 161 retracement extension, excuse me, that's when you could expect to see things starting to turn around. We really haven't gotten any, huge downside moves, because I mean, since the 3rd of January, it's basically just pressed higher and higher on a daily basis. TSI is getting up towards the positive 50 level. That tends to be a high side for this index, and if it, and so we could anticipate some weakening going forward. Taking a look over here at the weeklies, again we came down last week and 2 weeks ago, squeeze on the TSI, continue to move higher here, and so but compared to back here we're still working at negative divergence, and so you can actually just draw a trend line under these little valleys, and that gives us when the TSI breaks back down through that, we don't know if we get across or not, but that would be an indication that when that level of support is broken, that the momentum is swinging more to the downside. Momentum in this case has pushed to higher highs, as would be expected watching the price action. If Mike were with us today, which he is not, he'd be talking about how this is just, it's getting extended away from its moving averages. Same thing on the daily chart, extended away from the 8 to 20 and the 50 especially. Okay, let's take a real quick look at the composite, the NASDAQ composite, to see how it's comparing to very similar. It, pushing to a new high, but it's at the high side of the Keltner channels on both a daily and a weekly chart, and it doesn't mean it's going to just absolutely reverse and fall out of the sky, but the timing for an anticipated, at least short-term pullback, at least the moving averages, can be anticipated. Like I said, we got a nice bounce yesterday. We got basically a fairly good sell-off going into yesterday morning, and then we got a reversal pushing up. So the buyers just came in, the buyers did come into town and say, hey, we're not done yet. Now those were all weighted indexes, and so now we take a look at the NYA or the NYSE and the Russell, and as you can see, the non-weighted indexes are not pushing back up into their past highs. This one here is just stuck in a trading range. it appears as if, you know, momentum's going sideways, and so we may just get more of this jostling back and forth over the next, you know, moving forward until we get a breakout either side. Russell? There we go. The Russell operating basically within support resistance, support down here at the 1353 level, resistance up here at the 1388 level. And this is the tail on this yesterday's candle, where we actually broke past these swing lows here. And for trend traders, some trend traders and some technical guys say, hey, you know, if you have busted that after a significant uptrend, and as soon as you break that and it goes to a new, even intraday low, that's indicative that the whole trend may be changing sometime in the near future. What's the near future? A week, 2 weeks, 3 weeks? You know, at this point, we don't know. It made a quick recovery back up into the, you know, 820 combo, and today it moved back above that. Now, if this fails here and pushes back down below either the 8 or the 20, that would be a clue for us that, aha, we may be going on back down to retest at the 50 level, or even below that. The past breakout at 1296, and oftentimes the Russell leads the rest of the indexes, both when things reverse to the upside and reverse to the downside. So we'll see what transpires there. The momentum on the Russell is just sitting on a daily chart, is just sitting as the zero line, and so not telling us that, well, there's just not really any real trend right now. And as we can see, there hasn't been one since December 9th. On a weekly chart, TSI has bent, you know, has rolled over, hasn't fallen out of the sky yet. Haven't really got a break there, other than, yes, it did roll over a little bit, but hasn't fallen. I always find this very interesting, is when I look at these TSIs and where you'd like to have a really good, you know, kind of sine wave going, where it goes up and crosses, comes back down, and pops back up and heads back up. It's really great when that happens, and we should be paying attention to it. But occasionally you get these ones that just go sideways, and there's no, and that is when the market is just basically range bound or on a sideways move. And until we get some kind of a catalyst that will drive the market either one way or the other, that remains in, you know, those, you don't really get a lot of clues off the oscillators themselves. And that's where we're sitting with the Russell. Now you can go to the intraday charts, and oftentimes the intraday charts, you know, we can get, you know, better signals off of that. And that's why I suggest, you know, being at least familiar with, because we can go over here, as you can see, this is the hourly chart on the Russell, and sure enough, here we're getting more of a sideways type of moves on both the momentum and the TSI, but we have to remember we're confined within this range. Now this range itself is about 2.58%, and so you know, with a fairly nice move. Looks like it's getting ready to roll over here. Let's take a real quick look at the spiders, because I would like to okay. It hasn't really dropped out of sight yet, but it may make that. We'll see what happens when we get into the final hour, whether or not we're going to be able to place a trade on that. So, okay, so that's it for the indexes. Any questions on the indexes, ladies and gentlemen? Good to see you, Warren. Did you get my email, Warren, with the BAM update? Okay, let's get back to the rest of what we're looking at. Okay, here is a chart that I was doing some studying today, earlier today, and I was looking at, someone's talking about their anticipations after the after the inauguration, what tends to happen, and a lot of this flows into things that we've observed for seasonality anyway. This is the election in November. These are trading days, not calendar days. They're trading days, and so we're very much seeing that rally in place. They say that the Trump rally is the biggest since Hoover became president. And then it's very interesting going into the inauguration slide, pullback, and again, this is 65 years worth of data, pullback, and then it can have a tendency to continue rallying for about 2 weeks. Okay, so here's if we go out here to about there, and that's when it rolls over. So it's about a 2-week period from there's about 9 to 10 days in here, and then the market will start to weaken up again. And this has happened, this type of pattern. There's been a tendency for every one of the presidents going back to Eisenhower in 1952. Now, we're not going to trade this particular entity, but having this as knowledge, matching up with the seasonality that we already know about with January going into February, and February typically being weaker, this may, and since this is a brand new, it's a new administration where the power in Washington has swapped completely over to the other party at this point, this may very well work out, exactly like this, and then we get a drop, and then we fall down. And I'm going to be taking some additional looks at this, because I'll bet you from 60 out to 80, 78, 80, that is just about a month's worth of trading. And as you can see, that puts us out into the mid-February time frame. Mid-February, early part of March, which ties directly into what we've been talking about with seasonality on the indexes. So does this say, hey, shy away from, long trades? Not necessarily, because if you have the setup, you need to take the trade, but it basically tells us, okay, this is the tendency of this time of year. Therefore, if I take a long setup, I may want to, take a half a position rather than a full position. I may want to, keep my stops even tighter than I would normally keep them. I want to, protect myself to the downside significantly. And then once we do get our rollover, we want to be participating, and that's one thing with the inverse leverage ETFs. We can participate as we go into a correction. And Mike Traeger mentioned the other night on the Wednesday night session that the presidential election year, after the new president comes in, tends to be a pretty rocky road. And regardless of where a person stands about Donald Trump becoming the next president, because he's having a rocky road just moving into it from a press standpoint. I've never seen a press that is so anti anybody in my lifetime, and but I won't go there. I'm not going to talk about that. But the market itself can be very shaky. Now, I'm sensing that with the market, that if the objectives and actions that the new administration plans within its first 100 days. And also more companies start, with their forward-looking projections, start going, we're going to start investing in the United States again, building jobs, I think that'll be a boost to the economy. That may, in fact, who knows, it's kind of like the polls at the election being wrong. Well, the projections based even on historical data may be totally wrong this time around, and we'll see. I mean, we'll see. Right now, that is just an opinion, but I mean, the guy's surprised everybody in the world, hasn't he? At least I think he has, and so it would be kind of interesting if he continued to surprise going into the new year, or into his first year in office. So path of least resistance, I think at this particular point, I see nothing that is going to basically be throwing us into a long-term downtrend. This is where Mike and I don't necessarily agree. 1 to 5 years, he's looking more here. I can kind of see that and kind of agree with that. But what I'm saying is right now is just a projection out that the market's going to follow its seasonal approach to, sell off at the end of January, go down, hit its lows in the February-March timeframe, and then rebound. Now, what kind of a rebound we get, that I think will dictate what's going to be transpiring into the rest of the year. So I can see us continue to move sideways. If we get a significant, pullback type of correction or basing pattern come in, I could see us push back up and break to new highs, because the market can still break to new highs even though we're getting the divergencies in the oscillators. So since Michael and Mike are not here today, they can't disagree with me. But everybody needs to kind of take their own picture. What about you guys? I mean, what are you seeing? What are your thoughts on where the market, both short-term and long-term? And feel free to type them in. I mean, nobody's going to hold it against you. Okay, Eric's seen a head and shoulders up until the head and shoulders plays out. Dorothy says market goes up. Are you extremely bullish, Dorothy, or what's your time frame for being that the market's going to go up until it goes down? Okay, that's good. Joe, that's absolutely right. The market is in an uptrend and will continue to go up until it isn't in an uptrend. Right on. Phil, hopefully, after you come to some of our sessions, that you'll at least have an opinion on which way the market's going to go. That's absolutely right. Dorothy makes a very important point that since the market crash, she basically says that one thing she learned from Lee Tanner is that the market tends to be in a continuous uptrend. Absolutely right, and that's one thing that Lee, I think, does an exceptional job with, is even when the market's correcting, he's buying stocks, that meet his criteria and have enabled him to beat the market on a consistent basis over the years. But the point he makes is that going back to 1929, when the stock market crashed and we went into the Great Depression, there's only been like 3 or 4 really significant bearish markets, or bear markets, maybe it's 4 times bear markets. And he goes, and we can recognize all of those. So he goes, if you go back to 1930 and you know, look forward, that's you know, about 80 plus years worth of data. Well, the majority of the time, the market's going up, other than those times when it wasn't, and you recognize though. Let's see, Warren, large moves up and down, then sooner or later, the bull will roll over. Yeah, right on. Phil, you're absolutely right. Phil says he's waiting for a pullback because his post-analysis of his trades have shown that some of his biggest losers are when he bought too late in a rally. Right on. That's absolutely spot on. Spot on. So I'll be posting, moving forward, posting how we're doing. This is the first week we've been operating since the beginning of the year. We got whipsawed out of a couple of positions. A couple we carried forward. We carried the two TZA and SQQQ, the inverse bearish ETFs on the NASDAQ and the Russell. Those got taken out for a loss, and CPE taken out for a loss. However, strategy 3 is starting to kick in, and hopefully we will see the same thing on strategy 3 as we saw last year. That's why we increased our amount of capital we'd be doing with strategy 3. Just a reminder to everybody, you know, I'm a firm believer is you have to be based on a sound system. And be very clear, you know, and the system has to be clear, simple, so that we can then multiply. Is every trade going to be a winner? No. But the thing about it is it's the system and how it's designed that is designed to basically give us the insurance to protect us when the trade doesn't work, but also keep us in, you know, for an amount of time to take care of the profits. We're then add to that the strategies, and the 3 strategies that I focus on are, this is the portfolio building stocks and ETFs, basic options. These are very rare, so only 10% of our capital is dedicated here, and we can dedicate up to 30% of our capital here for strategy 3, which is owning some long-term, some leaps. Out in 2018, we owned them on Tesla, the Spiders, and Nugget. Holding those and selling weekly options against these positions. So future presentations. We're in the process of doing Barry Moneymaker presentation webinars. We did one that was the IBD 50 does it again, and strategic planning for 2017. I don't know if you were on that session or if you're a BAM member, but I got really good reports back on you know, seeing how to utilize some of our sorting techniques to you know, find the top-notch IBD members. And then this coming Wednesday night with the premium members, we talk about a high probability early entry trigger. I think you will enjoy that. Add to that the comprehensive study about the leveraged ETFs that are on our watch list now. Continuing working on updating some of the training videos, and again, I'll remind you, if you know somebody who is a good web designer or you've used somebody in your business successfully, please let me know. And you know, basically right now we're just prepping for a year of explosive growth. I think 2017 has some, you know, some outstanding probability and potential. I've also started on doing live Facebook market updates and trading tech tips. Those are posted to the Active Trend Trading Facebook page, and now I just got to figure out how to notify people just before I go online for those live updates. And we'll be doing 2 to 3 of those per week. I do not talk about individual, you know, I will mention individual stocks. I may occasionally show people a setup on there, but I don't share the same trades that we're looking at for the premium members of Active Trend Trading. Active Trend Trading system is based on the 5 pillars of Active Trend Trading: what to trade, when to enter, when to exit, what strategy to use, and what to expect. Here's where strategy 3, this is what I liked about strategy 3, where it finished off the year last year. We had a 34% in our spider position, 100% gain on our first Tesla position, 52.9% on a position we held in Tesla for 6 months. And then we also own Nugget, but Nugget is one that we're just pushing forward. So last year we had 20% of our capital dedicated to this strategy. This year, I'm increasing it closer to 30%. As it stands right now, I'm invested. My foundation position is invested at a little bit over 26%. So just as a reminder, we've extended our special, the Friday webinar special, through the end of January. So if you want to come out and check out what Active Trend Trading and a premium membership is like, just follow this website. All the new membership links on the website tie to this special. So with that, again, 2017, a season of explosive growth. So please keep your keep growing the egg. And remember, Monday the market will be closed in honor of Dr. King. If you want to follow me on Twitter, follow the Active Trend Trading on Twitter, there's the address. Now we're going to prep to go into the final hour. We'll be online on that in about 3 or 4 minutes. So over the next 3 or 4 minutes, I can look at a couple of stocks. Anybody have anything that you want looked at immediately? I tell you, Tesla is the MCK and raw stress for less. Wow, Tesla is just acting like a beast right now. We'll see how that finishes up. That's why I only nibbled, for those of you on strategy 3 on this, that's why I just nibbled with a single contract position. MCK. McKesson. Now, of course, on McKesson, I would want to go in and take a look, Susan, at what its stock checkup would show me on the IBD website. But as you can see right now, McKesson has been in a long-term downtrend. It rolled over in May of 2015 and is basically fallen out of the sky quite nicely. Now the question is it starting back into a potential upswing? It does have excellent, it's got good range from a weekly standpoint. It's got earnings coming up. If you're owning it and you own it from over here and you've got better than 10% gain in it, earnings coming up on the 25th after the market closes. At this particular point, a person could either trade a pre-earnings run or wait till after earnings and then trade it after that. Oh, for possible puts. I think you'll have kind of a positive bias over the next 2 weeks. And so again, this looming earnings, I wouldn't be looking out for puts at this particular point. But it does have nice moves. Let's see, how much does a little bit over 2 million shares average volume, and it's got a range of about $2 to $3 per day. So depending on how quickly you want to trade those puts, you know, if you're just real short term prior to earnings, you know, that may be a possibility, but it just depends on how you're going to trade them. Let's see, Ross Dress for Less okay, Ross Dress for Less is in an uptrend. It is in a significant uptrend. It had earnings here that it popped up from. It does look like it's weakening on a daily basis. However, you know, we've got this going on here, and that, you know, that's holding that level of support. I would look, if you're looking to trade puts on this, one, we're not even, you know, we haven't got a close below the 50 yet. But we do have resistance up to about the $67 level. But to me, this looks like it wants to pop back up and go back up more towards the 70 level at this particular time. That's based on what it's basically finding support. The True Strength TSI is finding support at the 0 line and rebounding. Same thing for the momentum, finding support and rebounding. So I'm not seeing a put here yet because it's in a strong uptrend. Let's see, how are we doing for time? Okay, last one, ESNT. ESNT. This is one of the stocks we were watching from last week, and it continues to drive sideways, Dorothy, which is driving me nuts about this particular stock. I think it has great potential. It's high up on the IBD 50 list, but it just continues to drive sideways. And so I think I would be patient with it. I would see if it comes back and retest down. And I did a little bit of a test trade on this in one of my accounts earlier at the beginning of the year, when it was basically coming off of here. It looked like it was going to bounce off the 0. So I got in about here, got stopped out over here. And so now we've got, you know, we do have a nice level. 3160 is the level of where it could bounce, you know, is a strong level of support for it. But it's, you know, it's just, it like I said, it was a little bit frustrating. Nothing wrong with this stock. It is just driving sideways, but it hasn't made that commitment to start moving in one direction. You say, would a break above 32.92 be a good buy point? Yeah, I mean, you could do it that way. You could also draw your line across here. So if it moved back above, you know, 32.79, that'd be breaking that trend line. But it's done that before. I of course like it better, you know, down here in this area on a rebound from 32, you know, somewhere between 31.80 to 32, because it breaks that. But yeah, either way. And yeah, because you can see the volume's kind of sliding off. So okay, with that, folks, we'll call it a day, and glad we had a little bit of time to go over a couple of stocks. Please enjoy your weekend, all 3 days of it. And if you're a premium member, be looking on Sunday for that comprehensive evaluation of the and plan for the leverage ETFs. So with that, have a great weekend. God bless everybody.